Good morning, guys. How are we all doing? I am Dan from Trading with Dan. Happy Monday, everybody. Welcome to the new week. Hope we all had a good weekend. We shall go straight over to those Bitcoin 4-hour charts. So yes, we weren't able to maintain above this resistance area. We are now back below it, we're looking to put, obviously in the bullish case, we're looking to put in a higher low, pretty much relative to this low here, which gives us a lot of leeway. But what we would hope is that it will be this area here, so we could probably even make this into a bit of a zone. A support zone probably about here. This is basically where we're at right now and where we would ideally like to be supported, and then bounce off there, take out that resistance to the upper side again, and then get some acceleration deep into the 20Ks. Obviously, if we lose this, we can still put in a higher low relative to this low at any point, obviously before this low, but that would look as constructive as bouncing here. It would kind of look like we're just in that range again, and if we do just basically establish the fact we're just trading in the sideways range, we could very easily drop out of that range, and this could start to form into just into a rising channel, which then like we said, a rising channel would have a higher likelihood of breaking to the downside. So all to play for. We have got a big week. We've obviously got GDP numbers, which are probably going to indicate that we are in a technical recession. So a technical recession, but remember, these are just nominal GDP numbers, not real GDP numbers. And then also we've got the Fed as well. We are clearly in a state of bad news is good news for these markets, because obviously we are battling with Fed tightening, and we are basically just awaiting the point in time that will reverse and the Fed will pivot. And obviously, the worse the data is, the sooner that time will come, and then obviously the more bullish markets then become, because these heavily financialized markets are driven primarily on liquidity and not on any other sorts of fundamentals. Literally, liquidity. It is a function of liquidity. We are in a Ponzi scheme, and a Ponzi scheme does fine as long as there is liquidity. So we look at some other markets. S&P having a bit of a pullback here as well, below this resistance, similar to Bitcoin, needs to get back above and accelerate, which, I mean, it's still very constructive looking. It still could easily do. However, if we fail, if we come back down, like I said, similar to Bitcoin, we are just basically trading sideways within a range. If we get supported around this level, then we'll look nice for a higher low, and then we can try and take out this high and then move onwards and upwards. But we'll see how it goes. DXY is certainly looking like it wants a pullback. I mean, it is at a level where it could basically bounce and take another leg up, but I would err on the side of to the downside here, just because it is becoming apparent that central banks are basically re-liquefying markets via buying bonds. We have obviously we've had forever yield curve control in Japan. We now have yield spread control. So basically, the ECB is buying bonds to maintain a reasonable level of spreads between the various constituents of the eurozone, namely Italy and then Germany. The spread between those bonds. So they're basically will be buying Italian bonds. I'm pretty sure initially the plan was they would sell the German and then buy the Italian, but maybe they're just buying, because I mean, initially the plan would have been obviously a net zero increase in the actual liquidity, but I think they're going for an increase in liquidity, because that is realistically the only way it's going to work. And then we pretty much all know it's a matter of time before Germany gets involved. I mean, if the EU is going to do this, and which is and I don't mean the EU, I mean the ECB, and we have got a massively weaker euro as it is only a matter of time before the Fed has to step in and start helping, either buying European bonds or literally just doing currency swaps, where they just literally give the eurozone give them dollars, and it will ultimately be bearish for the dollar. I mean, we went through a crisis in 2008 where the markets basically were done, where all the actual financial system separate to the basically the central banks went insolvent. The central banks took on all that risk. Central banks are now insolvent, and the sovereign is taking on all that risk. And then when we have basically, I mean, there is one final step, and that is when all the central banks are basically in a mess. There is just the one final central bank, which is the Fed, the reserve currency holder, that then takes on all the risks. So the Fed ultimately is going to is the backstop for this system now, and it is the last backstop. There is no more backstops after the Fed. And yeah, I mean, you can just argue there's no more last backstops after central banks, but just out of the central banks, the Fed will be the final backstop, purely because it just has an ability to produce more dollars, because the world has a demand for dollars due to it being the world reserve currency. It's literally as simple as that. Nothing else to do with anything else. But yeah, so this is potentially going to come down. The 10-year also, if this breaks below here, we are also done. We are also, well, most likely done with this being the high print for the 10-year, and we will be coming lower back towards sub 2%. And this will be it will be a pretty interesting move down. Growth stocks, tech stocks, growth stocks. Potentially, most likely, even crypto will go on an absolute we'll go on a good run. It'll be bullish. It'll be bullish price action. If we break down from here and start to head towards 2%. All this is just the price of money into the future. All growth stocks are basically incomes in the future getting valued in the present. If basically we have a lower discount rate, then they have a higher valuation. Simple as that, and therefore have a higher present value, i.e. price. So yeah, there we go. Gold not doing a lot, but I mean, you'd have to hope that we put in a low for gold. If we are going to see these yields come down, it is going to be very bullish for gold. If you're going to see the DXY come down, it is going to be bullish for gold. Yeah, so based on what I'm saying, you would expect gold to pick up from around here. Oil looking nice and weak, which is what we want to see. We want to see oil break down. I know obviously it's because of bad news, recession, whatever. But like I said, bad news for financial markets is good news. And I mean, we're in financial markets, are we? We are biased here. We want our number go up. So this number go down, help our number go up. So yes, what else? Ethereum Satoshi parent made a nice new high on this move, hit the upside, deep into the upper side resistance, and then has come back and reset. So I mean, if it gets supported here and then takes another leg up, it is starting to look spectacular. This asset, this chart is. If it gets towards the top, especially with a strengthening Bitcoin, Ethereum is going to be doing great things. Ethereum did itself pull back as well, similarly, but you can see still chopping around in this range now. Obviously, if we take out these lows, we certainly get a move lower. Take out these highs, we can get a move higher. Obviously, it goes without saying. So let's see what some stochastics are doing. We do know the 12. I think it was the 10, 12, and daily were not looking so good, and then obviously they have dragged us down a bit in this shorter term. 8 hour, sorry, we're 4 hour first. 4 hour is still pointing down from this rejecting, getting into the bullish zone. So downward pressure from 4 hour, still downward pressure from the 8 hour, still downward pressure from the 10 hour. 12 hour got quite a bit of room to run. Daily is now turning down from a high level. I guess 2 days losing a bit of its upward momentum, and then above this, then we are looking good. So I mean, overall stochastics are looking well, because I am generally just a longer time frame investor. These aren't looking bad for this being the low. Even if we do take out this, even if we do come back towards 20k, even sub 20k, these larger time frames are still looking good to eventually drag us back onwards and upwards. But in the short or medium term, we could lose this level, and yeah, we could easily come back towards 20k. We could easily come back and test these lows in the context of this, then all turn back up and then go on another run. But all in all, price action is generally constructive here, unless we are thrown any curveballs, and curveballs are probably going to be things like are probably going to be things that like extremely good news that wasn't expected, because similarly as bad news is good news for these financialized markets, good news will be bad news. So if we get some really good news, then obviously that will indicate more Fed tightening, and then yeah, potential another leg down. So yeah, that is about it, guys. Remember, this is not financial advice, not a financial advisor. Always do your own research, and I shall speak to you guys soon.